Okay, a variation on stopping volume has arrived on 2 bars rather than on 1 bar. On the first bar, supply was so heavy that professional money was unable to absorb all the, let's say I'll put here stock, but it could have been anything, dumped onto the market. This allows the market to fall on the next bar, usually on so-called bad news. This can be gapped down on the opening, causing the panic. However, to close in the middle of the highs indicates demand has overcome the supply. Bag holding. Beautiful example, Philip. Do you want to go and talk about that one? Because this is a good one. I mean,
well, I think we should let Tom talk about it.
Right, well, Tom,
I can't see it.
Well, he can't see it
Right,
properly
no,
because
I'll
unfortunately he's losing his eyesight here. But
Tom knows the principle.
I can describe it to you, Tom. Let me just show you. Right, the market comes off and falls quite rapidly. We get a gap down bar here. There's some news. The volume is ultra high, very high.
Yeah.
And then immediately the market comes back down just a bit below it on very low volume, and it takes off to the upside. It's almost like a professional money have taken advantage there. Do you want to just discuss what we're seeing on that? It's almost like stopping volume, but this time the volume is very high on this chart. But instead of stopping the down move immediately, they come back down below, which is somewhat unusual. We don't often see that. The volume is less than the previous 2 bars, and then it responds, and then we get the gap up and up we go.
Well, you won't get precisely everything to work just as you want it to.
Sometimes you do. Sometimes the bus is obvious.
Yeah, sometimes it's obvious, but when you get a down move, professional money steps into the market. Inevitably, it's high volume on a. Don't forget, it's got to be a down bar. Usually closes in the middle, so you know professional money stepped in. If the news continues to be bad, if they feel they can buy more at a lower level or shake more and more people out, they will. But the actual bag holding is when it's clearly gapped down with a narrow spread and the volume is massive.
That's what we're seeing here. It's a gap down bar.
It's the exact opposite to an end of a rising market.
Yeah, and that will be on some sort of news of some description.
Yes, it would.
Okay, so when you see this sign of strength, which it's difficult to find examples of that, isn't it? Recently,
there aren't many
because the market's been in a bull run. We had difficulty finding the bag holding, didn't we?
You'll find it really only in stocks. You don't tend to find it in the indices. There's not enough movement in the volume.
No, so it's an unusual. But when you see the reason they've been difficult to find the last year, we've been going up.
Yes,
bag holdings happens when you're going down.
Yes.
So we had to go back a few years, didn't we, to find examples. There are others.
I've got 1 or 2 actually.
But if we see a nice bear market, that's the sort of thing you're going to look for to mark the bottom.